Hello everyone, this is Owen Wall Street with the TradersPerspective.com doing my weekend analysis. Before you have natural gas. I'm just taking a look at the weekly time frame. Went ahead and put in the Fibonacci levels via these green lines here. That way you could see it without all the unnecessary clutter. Picture can get a little foggy as it is with the moving averages and such. So this week was closed out pretty much like I expected. That I really didn't buy into. If you can recall from my last videos, I wasn't a big proponent of this supposed new uptrend that a lot of people were looking at and getting overly bullish on. Price resisted this 50 period simple moving average that I identified on my last video, and you can see here that we ended up closing underneath this downtrend line. We did have essentially like a fake breakout, and we managed to close. We did hit the lows of this trend line here, which I'll zoom in on momentarily. But as you can see, we did close below this trend line, so that would indicate that further sell pressure could and probably will take us out of this uptrend line once again, fill the gap which I've identified here from my last video. And again, I'll zoom in a second, but notice that we failed to get back above this 38.2% Fibonacci level here, which acted as the resistance. That was another noteworthy event that I had identified in my last video. So again, when you cannot get above one level, the next test is to see if you have support at this level. So at some point in time in this upcoming week, we're going to see prices, drop back down to this 50% retracement level around this 2.8 level. And at that point, we could see another bounce indicated by this intersection here. If you're not familiar with how these crossings occur and what happens around them, please do some reading on that. It's pretty interesting stuff. But so in the meantime, I think that we'll be seeing further sell pressure down to this 2.8 mark, and then once we get there, we'll probably have a little bit of a rally. By a rally, I should say a little bit of a stronger week where price kind of reverses a little bit, and then we'll see a continued bounce off this trend line and further down to the 61.8% level, and that's going to be the level where you want to pay attention to, because you'll have either a nice bounce up to here at minimum, or B, you'll have another opportunity to short further. So it's going to be up to natural gas at that point in time, but as far as trading is concerned, the 61.8 gives a nice opportunity for a good trade back up to this 50% level, and then it'll be dependent on this trend line most likely. So that's what I'll be seeing. Again, a failure of this uptrend line going down to the 61.8 leads to a test of either this 50 or all the way back up to this uptrend line again. So that will be in the future. Getting ahead of myself, so let me just drop down to the daily time frame so you can see that trend line. So you can see it here. That's the line that I was referring to. Price did get above it and quickly ran into this 50 period simple moving average, as well as this Fibonacci retracement level here, and then we just proceeded to go lower, closed out the day at the lows, bumped that trend line near this 2.93 level, and again we have this gap down here. So dropping down to the hourly time frame and zooming out just a little bit here. Don't worry about these candles being a little bit blurry, that's fine. I'm just trying to show you what we're looking at here. So we had the gap here notated by this circle that we ended up filling, and here's the support near this 2.938 level or so, and then we have this gap here. So as I mentioned in my last video, I wouldn't be surprised if we closed below it or near it, and then started off the upcoming weaker. That sounds better, weaker. So onward to close this gap at minimum, and then also go down to this 2.8 level of support. So that's pretty much what I'm seeing. Natural gas is playing out again, like I've been seeing. So rightfully so, stayed out of this trade. Just waiting for maybe another pop or so, to get into a nice short entry here. But I might just wait on that as well, because it's still between this trend line, and it may hold for a little bit and then bounce down. But looking at this 4-hour time frame, you can see here that there's a good probability that we're going to pop up, test this this trend line once again, as well as this 200 period simple moving average near this $3 mark, let's call it. So expect that. But I would not be surprised for us to maybe start off the week with either maybe a gap up here, which will be a fake out, and then it'll drop towards the end of the week again. That's another possibility. But however you choose to play it, just make sure again that you use your stop losses and understand the targets, either if you're a bull or if you're a bear. But right now, the bears definitely have a very good stronghold on natural gas prices, and I expect further price sell pressure to persist. So that's what I'm seeing. I'll see you all on Wednesday. Hope you had a wonderful week last week and a great weekend to rest and relax. And this upcoming week, let's get it done again. So, natural gas, further sell pressure. Bears are still in control. Thank you all so much for watching. I'm on Wall Street. This has been a presentation by thetradersperspective.com.